MCX IPF presents Commodities Trade.
From steel and sugar to copper and corn, commodities started 2021 with a bang, surging to levels not seen for years. Iron ore, the key ingredient needed to make steel, palladium used by car makers to limit harmful emissions, and timber all hit record highs in the past week. Commodity indices are at multi-year highs too, up more than 20% in this year and 80 to 90% up from their 2020 lows. Rapid economic recoveries in Europe and China, with China being the world's biggest consumer of raw materials, alongside signs of marked rebound in the US, have all led to the rally. COVID-19 related supply chain disruptions and supply inventories lower in some raw materials have added further fuel to the fire. And then there is an EV supercycle as pledges by governments to boost renewable energy and EV use that will make all the various forms of green technology that rely on a bit more expensive. All countries are putting in stricter carbon emission standards, leading to higher demand for green metals like copper, cobalt, nickel, lithium. And while the demand is improving, the supplies are slow to catch up. Due to the COVID-led production and supply chain disruptions, commodities have also drawn support from fund managers seeking assets that will benefit as the global economy picks up speed after the pandemic, and that can also act as a hedge against rising inflation. Given the current uncertainty, markets are cautious on the length of the rally, questioning if the current bull run will last as long as the previous ones, as the producers and consumers react faster to prices. Also, there is an ample spare capacity with producers, and it's more a reflation trade mixed with reopening trade. But the rising prices do not have the same effect for all countries. For example, the impact of the commodity rally depends on whether you are an exporter or an importer. For exporter countries, price upswings is a good news for public finances. The likes of Australia, Chile and Indonesia all make huge sums of commodities when the prices go up. But the importing countries looking to rebuild infrastructure may find their budgets less than what they used to be. Infrastructure to manufacturing to automotives use large amounts of metal. So take it by the example of copper, the leading metal in the world, now has found use in renewable energy and electrical vehicles. With the prices having surged 80% in the past year, various industries that rely on copper are a bit more expensive now. The global copper consumption has seen a rise as per estimates from the UK consultancy Rosehill, and is expected to gain 28% during the next decade, from just below 30 million tons demand in 2020 to 38 million tons in 2030.
MCX IPF presents Commodities Trade.
Brought to you by MCX IPF.